Hi everybody, Thomas here. For today's analysis, we are going to take a ride on the airlines industry. We're going to take a look at Southwest Airlines. The stock has been dropping quite a bit over the course of the last several months, and it looks like it may be setting up an interesting new bullish opportunity. Question is, does that represent a nice opportunity to get in with a really nice value, or is this one of our proverbial sucker's bets? So let's go ahead and dive in. This is a one-year daily chart for Southwest Airlines, stock symbol LUV. We can see that over the past year, the stock has been following a pretty strong downward trend from a high about a year ago at around $40. 200-day moving average has been sloping downward throughout that period, while the stock dropped all the way down to a low at around $22 at the end of October. From that point, however, the stock has picked up some interesting bullish momentum. We can see that it rallied until last week up to a new peak at around $25 per share. And then it's been dropping back a little bit from that point. The 20-day moving average over the same period, we can see that it bottomed out and formed a nice little bowl, and now it's starting to trend up. This is actually a really nice setup on a daily chart right now for a bullish level 2 setup. So all of those things are starting to look very encouraging if you're looking for an opportunity to buy a stock at the bottom of a downward trend with some good chances that it's got some room to rally and possibly even reverse its longer-term downward trend. The ability to reverse that trend really depends on what the underlying strength of the company's fundamentals are. And so let's go ahead and dive into those and see where things stand right now. I always like to start by paying attention to free cash flow. For Southwest Airlines, we can see that free cash flow has been negative. In fact, it's been negative for all of the last year. That's a strong warning sign that anybody should notice and pay attention to and think about in practical terms. The interesting thing, however, over the most recent quarter is how this pattern of negative free cash flow has begun to turn around. It hasn't completely reversed because we still have negative free cash flow in the last quarter. However, moving from $1.4 billion in negative free cash flow to a negative $850 million is a sizable improvement, and that could indicate that the company is starting to turn the corner. The quarters to come will ultimately tell that story for sure. In the meantime, however, the company's cash and liquid assets have been healthy at $11.7 billion. Now, this is especially interesting when you consider that the company has a little under $8 billion in long-term debt. That means that Southwest Airlines could pay off all of their long-term debt right now and still have more than $3 billion in cash left over. That's a strong sign of fundamental strength. Company's operating profile is also showing some signs of improvement. Over the last year, net income was about 1.95% of revenues. This is a metric that I like to use to pay attention to the company's operating profiles, identify how profitable I think the company is running. This is especially useful when you compare the previous 12 months to the most recent quarter. And in this case, we can see that that number increased to almost 3% from 1.95% in the 12-month period. That's an improvement that indicates that margins are expanding, profits are increasing. It also is an interesting counter to the pattern of negative cash flow that we've seen over the last year, and could be one of the things that is an indication that this turn from negative $1.4 billion in cash flow to about $850 million in cash flow could be a sign of positive things to come. Southwest Airlines is also a company that pays an interesting dividend. It's not especially high at the stock's current price. We can see a 72 cents per share, which equates to about 2.9% in terms of annualized dividend yield. But the fact that they pay a dividend at all is interesting and is certainly useful, and is one of the reasons that this is a stock that I'd be willing to consider for the Rebel income system if everything else works out correctly. The real intriguing aspect of Southwest Airlines right now, we already talked about the stock's overall technical pattern right now, which does look interesting. That is supported by its value proposition. We can see that my fair value target price right now for this stock is around $66.50 per share, while it is sitting at just a little bit below $25 per share. That means that the upside on this is in excess of 168%. That is very significant and is certainly something that should be worth paying attention to and is certainly tempting. Are all of these fundamentals sufficiently strong to support the notion that the stock is a good value right now? I think there's a strong argument to be made. If you want to be more conservative and you want to wait for another quarter or two to see if the turn in negative free cash flow is something that is going to continue to improve, then that's okay too. But it does look like right now the stock is offering a very interesting value proposition. The next question, of course, whether you're thinking about this from a long-term perspective or possibly thinking about trying to take advantage of that new bullish pattern that is starting to emerge, is whether or not the reward to risk profile is good enough. So let's go ahead and go back to our charts and let's take a quick look at that. With the stock just a little bit below $25 per share right now and immediate resistance right in that $25 range, it does look like the stock is close to a point where it could break out and start to pick up even more bullish momentum. The question that naturally should raise is how much upside will there be if it does break above $25 per share? We can see based on previous pivot activity that it looks like we should have next resistance probably in the range of $27 per share, perhaps a little bit above it. I'll just go ahead and call it 27 for the sake of argument. What if the stock's bullish momentum doesn't persist? The stock has been tracing back a little bit over the past few days, and that does suggest that bearish momentum in the very, very near term could be picking up. We are seeing some stabilization around where the stock bottomed earlier today. Looks like that's at around 24.50. So there's a very, very narrow range right now between support and resistance. Now, if the stock does drop below 24.50, it does look like there should be next support. I'm going to go ahead and put that at 23.50. This is enough to give us a pretty good look at overall reward to risk. There's a little over $2, just to keep things simple, I'm going to call it $2 per share of upside right now, against about 50 cents of downside to immediate support, and about an additional $1 below that if current support breaks down. For the time being, however, we've got about $2 compared to 50 cents. That is more than 2 to 1, which means this is starting to look like a very nice, very attractive new bullish short-term opportunity if you're more interested in short-term trading strategies. If you are like me, looking for good opportunities to take advantage of the stock's long-term potential, and you like the overall fundamentals, then it's pretty easy to say right now the Southwest Airlines is a pretty big bargain and a smart buy. Thanks everybody. I hope this has been helpful. If you like this video, please go ahead and subscribe to my channel by clicking here. You can also learn more about the Rebel Income System by checking out this video over here. If you'd like to subscribe to my Rebel Income Reports or trading alerts, you can go ahead and check out my Patreon page. The link is down in the description for this video. Thanks for your time. This is Thomas at Rebel Income. Talk to you again soon.